everybody. It's Brian Shannon from AlphaTrends.net. Today's Friday, the 13th of October, 2017. I hope you had a good week of trading. The markets were a little bit mixed, but generally positive. The biotechs lost a little bit of ground, and we'll talk about those, of course. Let's take a look at the action. We are, of course, still in a bull market. So as I mentioned on Twitter, and if you're not following me on Twitter, then it is at AlphaTrends, and I would suggest that you do follow that for all kinds of updates throughout the week. Anyways, during a bull market like we have right now, a lot of people think it's up too much and there's no way it can be sustained and all of that. And maybe you're right. Eventually you will be, I suppose. But meanwhile, the mantra remains the same, which is the trend is your friend. Don't fight it, number one. Don't sell short a market in an uptrend. If you don't understand it, move to the sidelines and cash. And certainly don't chase individual stocks. Don't be the person who buys gap opens and stocks that are running too far ahead of themselves. Instead, always approach the market with risk management as your first objective. If you do that, you're going to be okay in any market environment. It doesn't have to end badly, as people like to say it always ends badly, but that's only if you're unprepared. So don't chase, manage risk. Let's take a look at the key levels. We still are above this rising 5-day moving average. That's the orange line right here. And we are still making higher highs and higher lows. So a couple levels to be aware of next week. I guess first would be really probably about 254 to 254 and a quarter as an important level of support. If that breaks, and if we start holding below a 5-day moving average, then you want to start to be more defensive, not bearish, but more defensive. So how can you be bearish when the market is in an uptrend at all-time highs? It simply doesn't make sense. So we'll continue to let the trend be our guide and price action. The NASDAQ remains above its rising 5-day moving average. These levels here are some levels that I've drawn in, and spoken about previously for subscribers. This week we held the rising 5-day moving average, and the volume weighted average price for the week, you can see, ended up pretty much right at that level as well. So Thursday, we pulled back at the end of the day right to the week to date volume weighted average price and the 5-day moving average, and that's where we saw buyers reemerge once again today to bring this NASDAQ up to an all-time high on the weekly closing basis, and of course on the daily basis as well. If we do begin to see a little bit deeper pullback in the NASDAQ, the prior resistance at 146 to 146 and a half is the more important level that we'll want to see hold. There's nothing suggesting that is going to happen. A lot of people will point to the volume and say, but it's up on light volume. And you know what? That's true, but only price pays. Listen to price action. Make your decisions based on price action, not on volume. If you get a little bit, if we're seeing the market maybe losing a little bit of its luster and volume slowing down, then manage risk more. Put your stops tighter, new positions, trade them on their own merits, but do so maybe with smaller share size. But don't sell short against a primary trend in one of the greatest bull market of our generation, maybe. The Russell 2000 lost a little bit of ground here, as we mentioned, but still above the volume weighted average price from the most recent leg higher here. So we saw a bunch of crossing back and forth. Let's go down to a 15-minute time frame, back and forth above and below this 5-day moving average. And I've pointed out to subscribers that breaking down in here was a reason to be cautious, not a reason to get bearish. The people who sold short in there because it made a lower low basically threw their stocks away. I think the important level for next week will continue to be the volume weighted average price from this gap higher, and if we lose that level, then perhaps we begin a deeper retracement. But right now there's nothing bearish about this market. The only thing you can say is that we're starting to correct through time a little bit, and a time consolidation is actually a bullish thing because it shows us that there are still bidders in this market. They might not be chasing the offers, but as prices pull back and pensions and big institutions want more exposure to the market, they're willing to soak in the prices rather than let it fall apart. They're not liquidating. So a correction through time is a bullish thing. I would be concerned, or be concerned over the intermediate term time frame if we got below below and held below this volume weighted average price next week. So keep an eye on that. That is the volume weighted average price from what is this date here? The date is the September 27th. Semiconductors, another new all-time high, and this is the poster child for why you don't sell short in an uptrend. There are people, people have been calling the top for this, over and over and over again, and I've been mentioning throughout the last year and a half, 2 years, that we're in a bull market for these semiconductors. When we have a rising 50-day moving average, we look at it as a pullback and a reason to be cautious, but the primary trend remains higher, and those people who sell short in an uptrend like this and hold on to it, certainly in my mind, get what they deserve for fighting such a strong trend. Eventually you'll be right, but look at all the money you're leaving on the table meanwhile and how much you're probably losing. The biotechs, as you know, I had mentioned, I think last week, a potential measured move objective up near 361. I still think that's the case, but risk management is job number one. So from an intermediate term perspective, I'm personally out of the biotechs. As we got bullish as they got back above that this level over here, as it took out the volume weighted average price from the prior peak right in here, and then we ran up. Now we've pulled back from this peak here at about 342, and the volume weighted average price from that peak, you can see, has been acting as resistance for the last week and a half, and we're also below a declining 5-day moving average. So that tells me it's undergoing profit taking. We've also this week broke below the volume weighted average price from that most recent move higher. So it tells me that maybe we drift down towards the 335 level and then begin to rebuild and recover a little bit. But for right now, for my personal time frame, I no longer own any biotech exposure. And it's not about whether I'm right or I'm wrong. I'm giving you information that hopefully can help assist you with your trading. I never tell anyone what to do. I provide levels. I try to be a coach and give good reasons based on price action. And hopefully you've learned something. If not, then I still wish you the best in your trading. Thanks for tuning in. Have a good weekend.